here is how I would invest $1,000 in 2025. Number one, I would take $600 and buy VOO, which is Vanguard's S&P 500 fund. It's 500 of the biggest companies in the world, all in one fund. Number two, I would take $300 and buy QQQM, which is the Nasdaq-100 fund, usually like high growth tech stocks, good for growing your portfolio pretty quickly. And then I would take my last $100 and I put it in a high yield savings account that has about a 4.5% interest rate. And then I would do that every single month. And I would grow a nice little nest egg. And then I had a little bit of money on the side just for in case.
Do you have $1,000 and no idea where to start? You're not alone. And the good news is you don't need to be a Wall Street expert to make smart money moves. In this video, we're breaking down exactly how to invest $1,000 the right way. Let's listen to the real people who have done it and let's learn from them.
If I had $1,000 to invest, here's exactly what I would do and what I would invest in. Step 1, I would open a taxable brokerage account. You can open one with Vanguard, Fidelity, or Schwab. Step 2, I would move $1,000 from my checking account into my taxable brokerage account. It might take a couple of days to get there, but once it does, I'm ready to buy. Step 3, I would buy an ETF. An ETF is like a basket of companies, and when you buy one share, you technically own a piece of all of them. I would invest $700 into VTI, which covers the total US stock market, and $300 into VX US, which covers the international market. The great thing about buying these two is that there's no overlap, so you own a piece of the entire world essentially. Step 4, I would hold those shares as long as possible. Investing is a long-term game. You want that money to grow, so give it time to grow. And finally, you sell your shares. That money is going to move as cash into your brokerage account, and from there you move it into your checking account. And if you're wondering when you pay your taxes, it's when you file your tax returns. And remember, I'm not a financial advisor, so do your own research.
From index funds and ETFs to high-yielding savings accounts and robo-advisors, there's more beginner-friendly investment options than ever. The key is diversifying your portfolio, understanding the risk tolerance, and thinking long terms instead of chasing quick wins. Even small investment strategy today can build a serious wealth over time, thanks to the compound interest.
If you are looking to invest $1,000 like a professional, but you don't want to pay 1% of your money to a professional, you might consider trying this 3-step simple system. I'm Tyler. I'm a former financial advisor and portfolio manager. Now I make financial content for free so that you don't have to pay for it. In his 2013 letter to all shareholders, Warren Buffett, debatably the greatest investor of all time, advised his readers to invest 10% of their assets in short-term treasuries and 90% in a low-cost index fund. And here is exactly how you would do that. Number 1, go to treasurydirect.gov. Open an account by providing some basic personal information and linking a bank account. Number 2, now log in, navigate to Buy Direct, select Treasury Bills, and choose either the 3 or 6 month term. And buy these in multiples of $100, so you would buy one. And number 3, now go to Fidelity, Schwab, or Vanguard, open a brokerage account by providing some basic personal information and linking a bank account. And once that account is open and funded, you can purchase $900 of a low-cost index fund like Vanguard's VOO, Fidelity's FXAIX, or Schwab's SWPPX. Congratulations, 10% of your assets are now invested in short-term treasuries, 90% of your assets are invested in a low-cost index fund, and you can rest assured that you have listened to the greatest wisdom that the greatest mind in investing will ever provide for free. And if any of this is helpful, like and follow, and I'll keep trying to get you one step closer to where you need to be.
So this is how I would invest $1,000 each month. My name's Steve. I'm a millionaire former public school teacher, now teaching personal finance for free so you don't have to pay for it. 1, I would never invest in meme stocks, penny stocks, IPOs, or even chase random cryptocurrencies as a beginner. I lost a lot of money in the beginning of my investing journey, and this is something that I don't recommend for most beginners. 2, because I'm 38 years old, I like to keep my portfolio as simple as possible and invest in S&P 500 index funds. I usually put around $500 to $600 into SPY and SPLG, but here are some other alternatives. 3, I usually invest $300 to $400 into technology and growth ETFs. These are a little bit more volatile, but I don't mind because I'm investing for the next 30 to 40 years. My favorites include QQQ and QQQM, but VUG is also a great alternative. 4, I usually invest $100 to $200 into dividend-paying companies and ETFs. My favorite ETF is SCHD, but I also have companies like Microsoft, Visa, and Home Depot. And if you're tired of figuring out how to invest, here are my favorite books and websites, or you can comment invest to join my next beginner's investing class. And if this video helped in any way, give me a follow, and I hope you get to financial freedom faster.
This is how I would invest £1,000 in 2026 if I was starting from scratch. First of all, you need a stocks and shares ISA, because that means you don't pay any tax on any of the gains whatsoever. You can put up to £20,000 per year into that bad boy and not pay any tax when you come to withdraw it. They are one of God's greatest gifts to man. From here, you need to decide what you're going to invest in. Now, what I would do is I would put 85% into an all world. I use the Invesco one ticker symbols, so the codes for that, once you've opened a stocks and shares ISA, the codes for that are FTWG and FWRG. There is slight differences between the two. I've gone over that in previous content. Have a look at it. I've got 85% into an all world that covers thousands of business across dozens of countries in both emerging and emerged markets. Then I potentially look to put 5% into a different asset class, different type of investment, something like gold perhaps, which I've previously done. Then you've got 10% left. Now, what I would personally do is break that up into 5 individual businesses, 2% each into each, just to have a play around, because I enjoy doing these things. If you want to keep it even more simple, just go for an all world. Now, this is exactly what I would do, not saying it's what you should do, but doing this approach over the last few years has meant that I've made 19% per year in my investment portfolio. If you want a free fractional share from Trading212 to get started, there's a link in my bio. Download using that link or promo code Neil, and you'll get exactly that.
If I was new to investing and I wanted to invest my first $1,000, these are the exact stocks I would buy inside my TFSA. A TFSA is a tax-free savings account available to Canadians that allows you to invest your money and for it to grow completely tax-free. Out of that 1,000, my first 200 is going into an ETF called VDY, which tracks the highest or the biggest dividend-paying companies inside Canada. It gives you big exposure into banks and the energy sector. Also, it pays you out a 3.4% dividend, and it's paid out every single month. The second one that we are buying, I'm putting $300 into QQC. QQC basically tracks some of the biggest tech companies in America. Instead of just buying the S&P 500, which has 40% exposure into tech, I may as well just buy the tech itself. It's highly growth focused ETF, and it's up over 40% in the past year. With the remaining balance, $500, I'm putting all of that into XEQT, which gives me exposure to over 8,000 companies across the whole world. This one is super safe, especially for new investors. It gives me exposure to Canada, US, Europe, Asia, just emerging markets in general. It's super growth focused, and it's a long-term hold. Let me know if you guys think this list was fair, and if you change any of these ETFs out, or if you'd buy into individual stocks. Listen guys, I'm not a financial advisor, but follow me for more.
So this is how I would invest my first $1,000 in 2026. My name's Steve, I'm a former public school teacher, and I grew my account by more than $200,000 in 2025. My first $400 would go into an ETF that tracks the S&P 500 like SPYM, SPY, VOO, or IVV. This allows me to invest in the top 500 companies in the United States like Nvidia, Apple, Amazon, and Google. Next, I would invest $300 into a growth or technology ETF like QQQM, QQQ, VUG, or VGT. Next, I would invest $200 into a high dividend paying ETF like SCHD, VYM, or SPYD. I personally invest in SCHD, and the dividend yield is currently 3.8%, which means that I get paid around $1.05 per share per year. Next, I would keep $100 in a money market fund with high interest. There are a lot of great ones out there, but the one that I personally use is SPAXX from Fidelity. If you want to start investing but don't know how to start, you can join my next beginners investing workshop today and tomorrow.